Good morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday. Hope everybody has a safe weekend. Overnight grain prices are higher. For the soybean market, we're continuing to focus, number one, on the possibility of increased demand for U.S. soybeans. Crush margins are near record high. May soybean oil tested 91 cents a pound overnight versus canola is trading $1.20. and sun oil trading at $2. So soybean oil futures are still the cheapest soybean oil in the world. We did see a Wall Street Journal article talk about the fact that food prices are going up 31% in 2021, and UN is forecasting up another 23% in 2022. So you have a market right now that's seeing tighter supply that's adding to food inflation. Also in the beans, we expect export demand to increase. U.S. soybean export commitment is near the USDA goal, and with U.S. competitive versus Brazil August 1st, we would expect that the exports might even increase another 100 million bushels. Over in the corn, between now and May 6th, we see a very wet forecast for the Midwest, and that's going to slow plantings. Some people are already taking 1 million acres off the planted acres and reducing the odds of having a U.S. corn yield above 180, which makes things even tighter. The fact this week that China came in and bought 1 million tons of U.S. corn suggests that they're replacing corn that they were expecting to get from Ukraine. And they could buy more U.S. corn, which suggests that our exports might be 200 million bushels above the USDA's guess. We also have ethanol margins that have turned positive with talk of more biofuels used in the blend for gasoline. In the wheat market, we're starting to see some world buyers coming back to the table to buy some wheat needs. The problem is there's not as much wheat coming out of the Black Sea, and new crop motif wheat futures are making new contract highs for the third day in a row, and the realization that some of the world demand will shift to new crop European wheat because of less out of the Black Sea. Here in the United States, the western half of the southern plains is going to remain dry, potentially lowering the hard red winter wheat crop, and the spring wheat is going to remain wet in North Dakota and the eastern part of Canada, which could slow acreage planted there. So we are putting a little stress on U.S. hard wheat supply and U.S. spring wheat supply, and would expect that would force wheat futures to trend higher. So demand for beans, demand for soybean oil, demand for corn, and potentially down the road lower wheat supplies should push prices higher. I will say that today I'm heading south. We're going through Indiana, looking at crops there, Kentucky, Tennessee, on into Georgia. For the next few weeks, I'll be working out of Florida and have my hand on the pulse every day, videos every day, and will be available for emails if you have any questions about the market. I also put out all the information that I normally put out from here. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.